Thanks for checking out this week's FinPrep Trading and Investment video newsletter. So let's flip to the year-to-date scoreboard here. Indices, so NASDAQ still holding up. The important change here, though, is that Russell 2000, your small caps, have flipped from being positive on the year to negative. Question here is, of course, is it a sign of things to come for the S&P as a whole? We'll take a look. Bonds basically flat on the year now, so a bit of give back there. Same story with copper, although positive. Definitely did lose a bit of its steam there, given how fast that move was. Not altogether unexpected. And in terms of British pound would be the other primary shift here, having flipped from negative on the year to positive. So remarks out of both sides of the pond, which were pound positive, clearly. The flash crash lows did hold, so we mentioned that multiple months ago. So that analog to sort of what had happened in S&P, for example, did play out. So interesting stuff there, but certainly was arguably helped out with verbal intervention. Continued strength out of the euro, which basically finds its analog to the weakness out of the USD index there. So that's the quick update on where we stand now. So basically, trending sideways on the S&P, which is arguably positive, given that we had such a massive run up off that 200-day moving average and into that 110 trend line support. Having it looks like 208, but that general vicinity did hold. So here we are now drifting sideways, kind of chopping away at that 228. Here's our fourth retest of that short-term trend line. So question here, even if we do give back and pull in a bit, looking at that rising 50-day moving average at 223, and of course your 220 trend line basically to hold possibly as support should we get an opportunity to pull in a bit. So trannies, whereas it had looked pretty strong, having begin that initial move out of that seeming bear flag and hold of the 9-weekly exponential moving average, really not a whole lot to show for it. So just a little bit of frustration in terms of just chopping down into that 50-day moving average and then breaking above, but really not going anywhere. So sort of mirroring the sideways action in the market overall. Similarly then with Russell, your small caps here basically, whereas we've been playing hopscotch along that 20-day moving average, here we are now on the underside of the 9, not able to close above it, although basically pinched in between your 20 and your 50 and at short-term support, trendline support. So question here is looking for Russell to determine a direction which would, more likely than not mirror the rest of the market. So are we going to break down out of this, and should we find support at 132, or is it going to be another retest of the 138 level? So looking for a resolution to that kind of open question here in the upcoming week. In terms of treasuries, so government bonds basically did lose that trend line, and we have the 50-day moving average crossing through the 20 in a bearish fashion. So already looking like oversold in the ultra-fast stochastics on a daily basis, potential negative crossover on the MACD on a daily basis, and not quite yet into oversold territory on the fast stochastic. So really would want a hold of 118 to say if this is really all we have for the year, beginning of year rally. Dollars, again, drifting downwards, though having previously broken to new multi-month highs anyway, above that 2650 area. Now comes time for the give back, so basically underside test of that 50-day moving average and a continued drift down, looking for potential support in the 2590 to 2580 area. But a bit of give back there on the dollar. In terms of gold, resting atop the 9 EMA, is it bullish consolidation? Is it prelude to a bit of a disaster? We'll find out. But strong showing out of gold so far year to date. And recalling, if we're looking at our seasonality charts of GLD, here's percentage price changes, over time, over the course of months. Each of these bars or lines representing a year. The one piece that is concerning is 2015 did kind of cap out here at approximately the 20th of January, whereas the rest of years, with the exception being 2013, beginning of year rally tended to be fairly substantial in duration in terms of months, in through February to perhaps March for many of them. So the question here is this really all GLD has to give? GDXJ by extension then holding up pretty well, so on the underside of your 50-week moving average, bit of a bearish crossover with your 20 through your 50, but not really having a tremendous impact on price currently, so positive there. In terms of copper, JJC, we mentioned the risk of a potential double top, so did open the week quite negatively, so any loss of the 50-day moving average would be concerning, opening the door for a retest of the trend line, capping the two peaks of the run in 2011. And any break, then of the 25 or 2850 level would be concerning there for copper. We're looking at yen FXY tracking ETF. Again, we had basically a close above the 50-day moving average with a slip there below, but basically anything to hold the 20-day moving average would be pretty substantial. Loss of the 20 would be concerning with the analog then for the gold rally, beginning of year gold rally, in terms of its duration and time. So euro, as mentioned, basically bit of strength, so gapped up and holding that trend line, short-term trend line, looks like fifth touch as resistance, and moved our way into it for nearly a sixth touch by end of week. So good move off euro. Still a little bit of a choppy trade, but certainly holding that multi-year, looking at the weekly chart, basically that downward price channel stretching back to 08, another touch into 2010, and a few more here. And here's your fifth, let's call it primary touch. So waiting to see how much more it has to give. Pound, of course, as mentioned, basically flash crash lows held, but basically now holding on the underside of the 50. So essentially consolidating, arguably in a bit of a rounded bottom, perhaps. The 118. That could be it. So it could be range bound for quite some time. The gaps may not materialize, although we'll see if we get a strong rejection off the 50. It may or may not happen, but yeah, looks like the pound is now in range bound fashion. All right, that was a quick weekly update. Talk to you guys next week. Bye.